Hello, those of you who are looking to purchase a home. I'm talking to not just first-time home buyers, but even if you're purchasing your third home and or you're refinancing. There are a couple of strategies here. I've got 10 of them that all 10 of them apply to purchases, and most of them do also apply to refinances. 10 strategies on how to lower your closing costs. And the first one I'm going to talk about is probably the least impactful, but the last one will have the greatest impact on your ability to lower your out-of-pocket closing costs, is what we're talking about. So the first one is when you're shopping for a home, try to find a home in a location where the taxes are lower. And the reason why that can have a positive impact on your closing costs is you will owe 1 quarter's worth of taxes up front at closing. So to make it the math easier, if the property taxes on your home are $2,000 a year, the home that you're looking to purchase, you will have a quarter's worth of that due at closing. So that's $500 you'd have to come to the closing table with on a home that has $2,000 worth in taxes. Now that's low taxes, maybe not in some markets, but in other markets that's very low. I know of people who are paying north of $10,000 for taxes per year. So that would be a $2,500 payment you need to come to the closing table with. So finding a home that's lower in taxes could absolutely help you to lower your out-of-pocket upfront closing costs. The next few things I'm going to talk about are things that you should do before you find the home, before you're in contract, because some of these take a little time. And this is shopping for some of the services that you're going to hire to handle this closing for you. And you can get some recommendations from your real estate agent, but I would also go out and find your own and then shop for price in most instances. So the first one would be an attorney. Now, in many markets, people use attorneys to review the contract, and in other markets, they do not. And in some markets, there are no attorneys involved in residential home purchase closings, and everyone just uses the real estate agent's contract and just goes with it. And a lot of people don't read the language. But I would recommend using an attorney to at least review the contract, and that should cost you a few $100s. If you're asking your attorney to also handle the closing, it's going to be more. But I would shop around for a real estate attorney with the lowest fees. That could save you maybe a couple $100s. The next one is title company. You do not have to use someone else's recommended title company. You could take the time to shop for a title company. The title insurance, examination, all of those things can cost money, and they do add up, and you could potentially trim a few $100s off of your closing by finding a title company who can do it cheaper. Next would be homeowners insurance. That seems to be the thing that is done at the last minute. You're a week from closing, and one of the conditions is that you show a paid receipt 1 year in full. And that's when people say, "Oh, I don't even know who to use for homeowners insurance." And now you're just kind of grabbing whoever you could find, and that's not the smart way to shop. So I would start the process now looking for a homeowners insurance company that could give you the lowest rate on your homeowners insurance. And you could also look at whoever's carrying your auto insurance policy. Sometimes when you bundle them all together, you get a better discount, so you can look at that. But your homeowner's insurance, you might be able to trim it also by a few $100s. So now, so far, when you add these things up, you might be up to $1,000 in savings if you play this smart. And another one is to shop for a home inspector. I'm going to say shop for a home inspector, but don't go cheap. The home inspector, in my opinion, is one of the most critical pieces here. A lot of people find themselves with a bad inspector, and then there are problems that arise soon after closing, and they ask if they can sue the inspector, and all these different things. You want to find a good inspector that's very thorough and that tells you the truth about the house you're about to buy, but also find one that's going to be as reasonable as possible. If there was one of the things that I mentioned so far that I'd say, okay, just pay the normal rate, it would be the inspector, because that one is extremely important. Next thing you can do is look for closing cost assistance. There are programs out there where in your community, not just down payment assistance programs, but closing cost assistance, where you may be able to get a couple of $1,000s as a grant, for example, to help offset some of your closing costs. But even with that, you need to start that process well in advance, because it could take a while to get approved for something like that. Number 7, this was going to be difficult, and I'm sorry to my real estate agent friends who are watching this, but you can ask your real estate agent to contribute towards closing costs. But if you're going to do that, you need to do that and get it in writing if the agent is asking you to sign a buyer's contract. They all will request that because they do not want to have you to drive you around every weekend for a month, and then you decide to walk away from them, and you found out that your aunt's a real estate agent. Now you're going to give the deal to them. And so just one little example, but you could ask your real estate agent to contribute a specific amount towards closing costs. It's going to come out of their commission. But I would say first see what they're offering as far as services to you, and then before you sign a contract, get them to agree to a little bit of a closing cost credit, whatever you can get, and then put that in writing on the buyer's contract before you sign it. Number 9. I'm up to number 8. Number 8, ask the lender to cover some or all of your closing costs, but it will likely be in exchange for a higher rate. So a lender receives a certain amount of commission for the rate they're offering you, and if you're asking them to cover closing costs, then that's going to come out of the commission they would earn. And in order for them to earn back the normal commission they would have earned on your loan, they would have to charge you a higher rate, which pays them even more commission to offset what they're losing in covering some of your closing costs. So you could always ask your lender for that, but before you do that, make sure you get their best rate before you drop that on them. Okay, get the best rate possible at that moment, and keep in mind that rates change constantly, daily, and sometimes multiple times per day. But find out what their fees are going to be and what their rate would be given your scenario today. And then you can also shop for fees too with the lender as well. You can shop for a lender for lower fees. You're not going to trim too much, but if someone's got a 1% origination fee and you've got good credit and you're going for a conventional or FHA loan, and there's no reason why you would need origination, then maybe you find someone who will have it without origination. Okay. Number 9, the timing of your closing will impact what you need to come to the table with as far as closing costs. So you have prepaid interest that you will pay at closing, and the prepaid interest is the interest you owe for the balance of the month based upon the day of the month that you close. So if you close on the 1st, you will owe at closing a whole month's worth of interest, okay? And if you close on the 30th or the 31st of the month, you'll owe 1 day's worth of interest at closing. So you could potentially, if the seller is amenable to having some flexibility in their closing costs, the later in the month that you push the closing date, the lower your closing costs will be. But then you have to look at the flip side. So where are you living now? Is it still costing you money to stay where you're at right now anyway? And you have to do that math and see whether it makes sense for you. And the final thing, and this one is the most important one, is to negotiate a seller credit or seller concession to cover your closing costs. Now, for example, for FHA loans, you can have the seller cover up to 6% of the purchase price towards closing costs. So if you buy a house for $200,000, that would be a $12,000 credit if you're paying full price. So now what I would do is I would make your offer. Let's say you're offering $180,000, but when you make your offer, make sure you put in your offer that you also want them to cover your closing costs. And you can give the estimate as to what that closing cost will be. You can get that estimate from the loan officer you're working with. And by the way, if you haven't found a loan officer yet, we would love to help you with that. Just need to follow the link in the first pinned comment and also the description to dreamhomefinancing.com will help you there. And if this video has been helpful for you so far, please hit that like button for me. Okay, so back to the seller covering closing costs. Well, if you come up front with your offer and asking them to cover closing costs, at least they understand what your intent is, and they're going to counteroffer. Okay, so even if they counteroffer at now 190 or 195 or even full price, I'll cover your closing costs if it's at full price, my full asking price of 200,000. Then that, at least you know that, okay, if I pay full price, here's what my payment will look like, but also I don't have the out-of-pocket costs that I thought I was going to incur. But before you do that, make sure your lender gives you a quote for what it would cost to buy down your rate. And I'm going to cover that in great detail in another video. But if it costs you a couple $1,000s to get your rate 1% lower, then that's part of your closing costs. Make sure that's included when you provide the closing cost estimate to the seller, so that not only are they covering your closing costs, but they're going to save you money each month for the term of the loan, because they're also paying for the rate to be brought down to a lower rate, which lowers your payments. Anyway, that's an amazing strategy. That's the best one of the group there, because that provides you with savings ongoing for the rest of the loan. If you do have any questions, if you need any help, please contact me down below. You can ask questions in the comments, and also you can find me by looking at the link and also the first pinned comment in the video. Thank you, and look forward to speaking with you soon.